Hi everybody, good evening to all of you. This is Abhijit Biswas and I welcome you to this session, this information session on the certificate program in applied mathematical finance for engineers. First, I would like to discuss what exactly is financial engineering. So let me first discuss what exactly is financial engineering. Now, financial engineering is also known by a couple of other names, like it's also called quantitative finance or mathematical finance, and also called computational finance. More or less, they have the same meaning and the same coverage. Now, one of the misconceptions that I would like to first clear out is that a lot of people who are engineers, who are from the mathematics or statistics background, they think that finance is same as accounts, which it is not, because to a lot of the people who are from a numerical background or engineering background, they do not feel very comfortable with accounts. But what I would like to emphasize is financial engineering is not at all much to do with accounts, very little to do with accounts. And it's a field which engineers and people from mathematical background can very easily adapt to and like. And also, the industry looks for people with engineering or other numerical backgrounds. So what is financial engineering? Well, basically it's an overlap, a combination of three fields. One is finance and economics, specifically financial economics. The second area is mathematics and statistics, and the third area is computer science. Essentially, it involves applying the theories from mathematics and statistics to solve problems in financial economics through computer programs. Now, to summarize, basically it involves theories imported from financial economics, mathematics, specifically calculus and linear algebra, and statistics and probability, and a lot of that has to do with analysis of data and econometric models dealing with, again, financial data, and some theories on physics. And these are solved using tools from numerical methods and engineering and computer programming and applied in the field of investment finance. Now, modern investment finance is very much mathematical and statistical in nature. It's more of a science than an art. Now, complex financial instruments are designed and developed by the financial institutions like banks and other financial institutions. And they also involve trading, which has become much more complex than it used to be earlier. And it also involves risk analysis, which is pretty complex. So with these in mind, financial engineering or quantitative finance has become a very hot area, very much sought after area. So who are financial engineers and what do they do? Now, financial engineers, they are specialists, they are super specialists. So as I just mentioned, they would be applying mathematics, mathematical formulae, through computer programming, build models which are backed by data, and make forecasts. Now, companies like banks, investment banks, other financial institutions, as well as IT companies, software companies that service the banking sector or the financial sector, they often employ people with these advanced degrees in financial engineering to work either as risk analysts or investment managers or bankers or traders, or in the support, in the trade support, in the analytics roles, trade analytics. So what a financial engineer needs to have is a very thorough knowledge of financial markets, its volatility, and the background knowledge of financial theories. And also, he should be able to develop models that simulate the market, predict the behavior, make forecasts. Now, just to give an example, just to give a very simple example, imagine that there are two companies, corporates, and they need to import some materials from overseas, some other company. And they need to import the materials not today, but after a few months. For example, let's imagine that General Motors needs to import some things in October 2017, but the foreign exchange, it has to import it from some other country, so it has to pay in dollars, but the foreign exchange is very much in favor of the US dollar today. So US dollar is costly as against the other country's dollar, from which other country's currency from which it has to import. Now, if it waits for these 3-4 months and then buys the product when it needs it, it will have to maybe shell out more dollars. It assumes that a US dollar is now pretty strong and it might get weak in the next few months. Now, it doesn't need the foreign currency, foreign exchange today. It has to pay later. But what it can do is it can approach a bank and enter into a contract which will lock in the price of the dollar as it is today. For example, today is 1st of July 2017, and it goes to a bank and says, okay, maybe I need to import something from the UK, and maybe a dollar is going 1.5 pounds today, and I think by the time I would require to import the materials, the pound might be more costly. I might have to pay $1.6 for a pound. So what I want to do is I want to fix the rate of the dollar today, although I will be requiring those pounds later. Now the bank enters into a contract with these corporates, what we call is a foreign exchange or forex forward contract, and it can lock in, the corporate can lock in a favorable price for the foreign exchange that it requires later. Now, similar kind of more complex products, these are called financial products, which are sold by the bank to these corporates. So similar kind of requirements may come in terms of maybe interest rates. Some company might be needing a loan, not today but later on, but the interest rates are now low, so it wants to lock in the interest rates now by entering into a contract with the bank. So these kind of contracts are known as financial products, which are sold by banks to corporates. Now, one of the jobs of financial engineer is to structure these kind of products and also value them. What is the proper value at which the bank should sell the contract, sell the agreement to the corporates? So that's where a lot of mathematics and statistics comes in to determine the proper price of the product that the bank will sell. Similarly, there are a host of other complex financial investments that these institutions, the banks and other institutions, do. Like they can be options, they can be swaps, and similar kind of more complex instruments called derivatives. Now it can be between two banks, it can be between a bank and an investment company, it can be, the trade can be between a bank and a corporation. Now these instruments, these financial assets the bank has traded in is in its portfolio, or the investment company has in its portfolio. Now what is the current value of the portfolio? That has to be determined on a regular basis. So that would imply that one has to find out what is the value of those derivatives. And these derivatives are pretty complex in nature. And to find the correct value of those derivatives, one needs some complex mathematics and some data analytics to arrive at a proper value for these instruments, so that the bank knows how much asset, what is the total value of its assets as against its liabilities. Similarly, you can have the investment management companies and like mutual funds and PMS services, where investors pool in their money, and these investment management companies then invest in the market. Now when they invest in the market, it's not a very straightforward task as it used to be earlier. Nowadays, very complex statistics are used to arrive at the best possible investment. So these fund managers, they employ quite a lot of mathematics and statistics, and that's where financial engineering theories and the methods come in. And thereafter, when investment has been made, or even before an investment is made, one needs to analyze these investment companies, these banks. They need to analyze what is the risk that they are carrying, how much money these institutions may lose, what is the risk that they are running. That's again where financial engineering and financial engineers come in as risk analysts. The knowledge of financial engineering comes in to analyze the risk, take in data, process the data, build models, and then find out and report the risk that the investment bank or the mutual fund or the other financial institution is carrying. And as we speak over the last couple of decades, and specifically in the last one decade, what has happened is a lot of the investment has become driven by computer programs, algorithms. The selection of assets to invest in, what is the proper value of the assets to invest in, and similar kind of decisions, investment making decisions are taken by computer algorithms. And thereafter, even the trades are done by computer programs. So that's where again financial engineering knowledge comes in and plays a very significant role nowadays. Now, financial engineers also find very important role in software and IT companies that support the BFSI sector, support the banks, the companies, the software companies that support banks and develop systems for the banks and similar financial institutions. So there also the development team needs to have a domain expert who understands the financial markets, the financial products very well, and can design systems, develop systems that can be used by the banks. They have the knowledge of not just the financial instruments, but have a very deep understanding of the theories that govern the valuation and the risks. And they have complete knowledge of the models, risk models and valuation models of the products that these banks have, their clients have. So that's again where financial engineering knowledge comes in very useful. So in all these areas, financial engineers have a very good scope. Now, what is the benefit in a career in financial engineering? Well, to summarize, it's 3 benefits. First, generally, the salary of a financial engineer working in a financial software company would be higher than software engineers or management graduates. And they get to work with better companies. So it's not just higher salaries, but also better companies and also better types of jobs that they do. Now, just to mention a list of institutions, or what kind of institutions that employ financial engineers. As I mentioned, it's not just the financial software, it's not just the banks and financial institutions. It's across all kinds of companies employ financial engineers. They can be like multinational software giants like Oracle Financial and SunGard and Numerics and MSCI, which develop systems for the financial sector, financial industries, banks. Then the multinational investment banks themselves, like Goldman Sachs and Morgan Stanley and Credit Suisse or Nomura, to name just a few. Then commercial banks like JP Morgan, Barclays or Citibank or Deutsche Bank. Then consulting companies like KPMG and Deloitte. Then there are hedge funds which employ financial engineers to devise strategies for investment, very complex strategies to make money. Then software companies, Indian software companies like TCS or Infosys and Wipro, which are now getting into developing quant finance solutions, what we call quant finance solutions for the banking sector. Then there are multinational analytics firms like Accenture and Capgemini and Genpact, Aranka, to name a few, which employ the knowledge that a financial engineer has. Then in insurance companies, then energy companies, energy trading companies, large broking houses, they employ financial engineers for their prop desk, their proprietary trading desk, as well as for serving clients to design products and also trade on their prop desk. Then there are trading firms which employ financial engineers to develop strategies, investment strategies to trade. In India, you have Religare, Futures First, or Edelweiss, to name a few, which employs very good level of knowledge. Now, to just mention what's the kind of salary that goes around in India for people with financial engineering knowledge and exposure. So freshers, depending on their academic background and the financial engineering degree or a financial engineering certification, can expect salaries in the range of 5 lakhs to 8 lakhs per annum. With a little experience in the domain, from 1 to 4 years, we see the salaries can range from 7 lakhs to 12 lakhs per annum. And with experience in the range of 5 to 8 years or 5 to 9 years kind of experience, the salary range is anywhere between 12 lakhs to 30 lakhs. And with experience exceeding 8 years, or 10 years or 12 years experience, one can pretty well expect salaries in excess of 50 lakhs in this profession. Okay, one of you has asked a question. I'll address that question. Yes, anyone you have asked a question. So I'll address this question after the presentation. Now, what kind of careers in financial engineering and risk management do you have in the market, in the industry? So one can join as a quantitative research or quantitative analysis department. One can be a developer of quant and analytical softwares. One can be into valuation models, for building valuation models. One can be in a model validation team, a person who validates a model developed by somebody else, some other team. One can be into portfolio management. One can be into analytics, portfolio analytics. Or one can go into risk management and risk analytics. One can be into product structuring, derivatives product structuring. Or one can specialize in high frequency trading and algorithmic trading, which is very much now a hot area. Now, what are the career opportunities in India? Where, in which cities and which companies I have mentioned, where you have, this is just a partial list of companies that I have mentioned, where you have opportunities for financial engineers. Now, in terms of geography in India, what has happened is that most of the major global banks have opened their analytics, in-house analytics divisions in India. Like in cities like Mumbai, Pune, the Delhi, Gurgaon, NCR region, and also IT major companies like TCS and Infosys and Wipro, they have been setting up teams which employ financial engineers for building systems that support these banking sector. So the teams are being set up in Bangalore and Hyderabad and Chennai. And all these are in support of global operations. So the career is not just in India. What happens is one can get into the teams, and then the teams, they are supporting the global teams. So it's not just the India trades or the India specific exposure that they get. Now, what are the skills that a financial engineer needs to have? Skills and knowledge that the industry expects the financial engineer to have. Now, to be a financial engineer, as we have seen, is a combination of three skill set areas. finance, mathematics and statistics, and computer programming. So in that same vein, you can just elaborate what are the things one should be having. So one should have a very good understanding of modern finance, financial economics and econometrics. One needs to have good programming experience in at least one programming language that the industry looks for. And depending on what is your role, depending on whether one is a quant developer or one is a valuation or validating quant, one needs to have experience in either C++ or Java or Python. Nowadays, Python is catching up very fast in this field, and one needs to have knowledge of statistical packages like R, which has caught up very much recently. Earlier it used to be MATLAB a lot. MATLAB still is one of the very popular ones, and of course SAS. So one needs to have exposure to any one of these packages at least. It's not necessary that you have to have exposure to all of them, but at least you need to have exposure to one of these packages. And as I mentioned, currently R is picking up a lot. And one needs to have very good understanding of advanced mathematics like stochastic calculus and linear algebra. And one has to have very good understanding of advanced statistics like multivariate probability distributions. And one has to have exposure to numerical computations. And then the product knowledge and the models that drive the pricing of the products. And also knowledge of the markets and how the products and the markets operate. Now, just to give a snapshot of financial engineering jobs that were posted towards the last second half of last year. So although it's a little dated, so you can see that companies like Barclays and Accenture and Cognizant, which are from a diverse fields, diverse industries, as diverse as that, they are looking for people for their either risk or related areas. Even companies like Tata Capital and Franklin Templeton, which are investment management companies, they are looking for people in this domain. One can go and check these profiles, which are all increasing over the years that we have seen. So just to mention a few of the roles that are currently there, so one can have a look at these profiles that are looking for financial engineering background professionals. Now, in this domain, in this light, is where this program is designed. The program that I will be talking about in this presentation, the program on applied mathematical finance for engineers, that's what this particular program is designed to impart the kind of knowledge that these companies are looking for. Now, before I go into the presentation for the program itself, let us hear what one of our past students have to say about the financial engineering programs that we conduct. Now, I'll just give a brief background. Sahil Puri had been working with Deutsche Bank for a couple of years in the IT team, and he wanted to move into quant analyst roles, which are much higher paying than what an IT team or IT analyst job gets. One of the aims was to get into one of the world's top most investment banking companies. Now, one of the problem that he was facing is that the best of these companies, they look for very, very specific expertise and background in terms of educational as well as the domain. And that's when he joined one of our programs in financial engineering. And let's see what he has to say.
Hi everybody. I attended the Financial Engineering Program from IIQF, and it's easily one of the best decisions I made. As we all know, that there is no rigorous financial engineering program that was available in India, be it engineering from the IITs or financial management from the IIMs. I believe that IIQF fills this gap very well. It offers a rigorous program that teaches you both the intricate mathematics as well as the financial intuition behind it. It has great faculty, many of whom are PhDs from Stanford, as well as people and professors who are there from the Indian Statistical Institute. The program focuses a great deal on applying theory that is there in the markets to real-world problems. The environment and the colleagues that I had made it one of the best experiences so far.
Now that was Sahil Puri, and that's what he had to say about one of the programs that he attended. Now thereafter, after the program, he got a job with Goldman Sachs Asset Management as a quant analyst with salaries in excess of 20 lakhs. So let's have a look at the program, the certificate program that we have to offer. So this is called the Certificate Program in Applied Mathematical Finance for Engineers. Although the name of the program is that we mentioned is for engineers, it's not specifically only for engineers. It is meant for people who have some background in some numerical field, be it mathematics or statistics or even econometrics. Now first, let me point out the highlight points of this program. First is, this program brings to you a faculty. The faculty who teaches this program to you is absolutely world class. That's the best faculty that you can get for this field in India. So nobody teaches financial engineering better than these people in India. These people have worked, the faculty, they have worked in US and UK and Singapore and other financial hubs, and in some of the largest investment banking companies. They have educational background which is unparalleled. Some of them come up from very advanced PhDs from Stanford. And the curriculum, the second highlight of this program is the curriculum. The curriculum is absolutely designed with the industry in focus. So it has been designed by people who are working with the top Wall Street banks and institutions. So you get to learn what the industry is looking for. And the third and most important thing is that we just don't stop at teaching you the theories. There is a rigorous implementation, practical implementation emphasis. The emphasis is very much on applying the theories that one learns. Now, the overall structure of this program, I lay out. The program has 7 core modules, what we call the core modules, the main modules, and the program assumes some exposure to certain fields, like one needs to have some exposure in finance, or one needs to have some exposure in programming or similar kind of thing. But if one doesn't have those exposures, then one can opt for primers, some bridge programs that brings you up to speed to be able to take the core modules. So there are primer modules that one can optionally enroll for, and come up to speed to whichever areas one doesn't have the exposure that is required for the core modules. And after the core modules, there are proctored exams and there are live projects. And one has to complete this to get the certification. Now, post-certification, one can also opt for advanced electives. So that's optional. And also, post-certification, you get placement assistance from our side. And also you get the benefit of continued education in the form of whatever developments happen in the particular areas that you have enrolled for in the particular program. You can attend upgrade modules later on, free of charge. Now, what are the primary modules that are needed if one has to attend the core modules? Now, if one has exposure to finance, the basics, then one can skip this module, or one can take the first primer, that is Introduction to Investment Finance. Those who are not coming from a very strong mathematical background, they can take an Introduction to Financial Mathematics, which basically deals with calculus and linear algebra. Then, if one wants to have a background in statistics and probability to take up the main modules, and one doesn't come with the requisite background in statistics, one can opt for a primer in probability and statistics. And if one doesn't have any prior experience, any prior programming experience, zero programming knowledge, then one can opt for a primer in programming in R and Python. So both these languages are taught. Then we come to the core modules. The core modules consist of Introduction to Financial Engineering, Financial Mathematics Part 1, Financial Mathematics Part 2, Financial Econometrics, and Numerical Methods. And we have now divided the derivatives valuation into 2 modules. So derivatives valuations 1 and derivatives valuation 2, and risk analytics. So basically 8 core modules, and thereafter one can go for electives, and these are optional. These are post certification. One can simply complete the certification before the electives, but as of now some advanced electives are offered post certification, like in advanced financial econometrics or advanced numerical methods, and complex advanced asset pricing and portfolio optimization. Now, to get a little bit more detail in the syllabus, the primers, the first primer, the Introduction to Investment Finance, what it teaches is introduction to the finance field and the financial institutions. And then introduction to the capital markets, the equity markets. Then introduction to the debt or bond markets, and introduction to the derivatives markets. That builds a good knowledge background for people without any prior knowledge of finance to take up the core modules. And those who want to brush up their mathematical background, the primer on Introduction to Financial Mathematics, it teaches linear algebra, differential calculus, integral calculus, and introduction to the ordinary differential equations, but with an emphasis on the applied side from the point of view of application in financial areas. So the emphasis is more towards an applied discipline, applied mathematics, and applied as in finance. And also the third module is for those who do not have the requisite background in statistics. So you have introduction to probability and introduction to probability distributions and descriptive and inferential statistics that forms the basic background that is needed to take up further advanced probability courses. And in the programming primer, we cover programming in R and programming in Python. So it introduces you to these disciplines so that you can take on the core modules. The core modules, 8 of them. The first one is Introduction to Financial Engineering, which covers Introduction to Financial Economics, Introduction to Bond Mathematics, Options, Fundamentals, and Exotic Options. Thereafter, one goes into learning Financial Mathematics, which covers probability theory in deep, then covers basic stochastic processes, then has a very thorough understanding of the Brownian motion and the maths behind it. Then one goes into some advanced mathematics like stochastic calculus, and then solving and building the Black-Scholes-Merton model, which is the heart of quant finance. Thereafter, one takes a program in financial econometrics. This module teaches time series analysis, regression analysis, and volatility forecasting. And these are applied using R and Python. So these are not just theoretical models or theoretical lectures. These are also very much emphasis on the practical implementation. Then one needs to have very good understanding of numerical methods for solving differential equations, the partial differential equations. So there is a module on numerical methods that covers methods for solving partial differential equations and conducting Monte Carlo simulations. With these modules done, one has the background to then proceed to the applied side of mathematical finance. Till now, it was the basic building blocks of quantitative finance or mathematical finance. Thereafter, we go into the applied side where we implement the models, apply these models, and apply the techniques, the numerical methods that we learn. First is we apply them in derivative valuations for equities and currencies, which is derivatives valuations part 1. Then we apply them in valuation of interest rate derivatives and trade derivatives, which is derivatives valuations part 2. And then into risk analytics, where we first introduce the concept of financial risk and all the associated knowledge that is required, then specialize into more specific areas of risk like market risk, credit risk, operational risk, and compliance. And that's where the core modules end, and one is able to take the exams for the certification, and one is ready to take the project. And after that, one can opt for some elective modules. Just to mention a few I mentioned here, like advanced financial econometrics, where advanced time series methods are used, like ARIMA and ARFIMA, and advanced models for derivatives estimations are taught. Then more advanced numerical methods are taught for simulations and optimization. And the pricing of advanced assets, these are also one can opt for later. Now, coming to the faculty who will be teaching this particular program, as I mentioned, in India, this is the best faculty that is there to teach financial engineering. They have global exposure in terms of their work experience, and as well as their academic background. Some of them come from Stanford or Columbia and Berkeley and Ohio and ISI and the IIT and IIMs. And these are all practitioners. These are all top quant practitioners who have worked at the highest level with the top global investment banks and across the globe, with decades of experience. And what they bring in is their practical knowledge from the industry and how it is done, what the industry is looking for. Just to mention a few of the faculties who will be conducting lectures for this program, you have Dr. Amit Ram, who is a PhD in statistical physics from Stanford. He worked with Lehman Brothers in New York and JP Morgan in New York, and then Stanchart in Singapore, and then he moved to Nomura in Mumbai, and then currently with Credit Suisse. And Dr. Narayan, who is the experience of over 9 years in the industry and teaching, with a PhD in mathematics from the University of Paris, and working in the industry in areas of algorithmic trading and related areas. You have Dr. Debashish Guha, with a PhD in operations research from Columbia, and with 25 years of experience working and teaching in quant finance domain, both in India and in New York. You have Dr. Samir Ranjan, with a PhD in theoretical physics from Purdue and an MS in mathematical finance from Columbia. He has over 10 years of experience working as a financial engineer. Then you have Kalyan Roy, an MStat from the Indian Statistical Institute, who has over 18 years of experience working as a quant analyst across multiple industries, both in the US and in India. Then you have Ritesh Chandra from IIT Kanpur and IIM Calcutta, with more than 11 years of experience in credit risk and related areas. Then you have Vishal Singhi, with a background of over 10 years in Kotak Bank and specifically in derivatives trading and derivative structuring. You have Snehal Soni, who is one of the leading personnel working in the algo trading field in Delhi. So over 18 years experience in that domain, and currently pursuing his PhD in Quant Finance from FMS Delhi. And then coming to the program delivery. The program is designed to be delivered over the internet via live interactive online lectures. And these are to be delivered over the weekends on Saturdays and Sundays. And the program makes available the recordings of the sessions in the digital library, as well as course materials, Excel files, program files, the lecture notes, and everything is available on the digital library. And there are assignments which are given for every module that one has to complete. To get a little bit more details of the programs, the classes are scheduled, as I mentioned, on weekends, Saturdays and Sundays, 3 p.m. to 8 p.m. Indian time. The course duration is for the core modules to 7 months. The 8 core modules are covered in 7 months' time. The primers are designed for a month each, and electives, they vary from 20 hours to 40 hours, and that is post-certification. The course fee is, for the core modules, the course fee is 1,55,000 inclusive of all taxes. And the primers, they have different course fees. The primers in finance, mathematics, and statistics, they are 17,000 inclusive of all taxes, and the programming is 23,000. And if one opts for multiple primers, there are discounts on the primers. The requirements for certification are that one has to complete the term end project, which is a live project, industry live project. One has to score a minimum of 60% in the 2 term end exams, and one has to complete the module-wise assignments. Now we lay a great emphasis on the placement support for this program, because we have a very strong industry connect. The trainers are coming from the industry. We are trainers to the industry. We conduct training programs for the companies in the banking and financial services domain. We're consultants to them. And we have a dedicated placement cell, which actually is geared to place candidates who complete this program with the quant teams of the institutions that I mentioned. Just to mention some of the potential companies where we look to place our students, and some of the companies where our past students have been working. So just a brief list of companies where we intend to place our students for this program. Now, just to mention what our previous students have to say, you have had a look at what Sahil Puri had to say. There was Lalita Dhuru, who was working in the IT team of Morgan Stanley, and post our program moved into the semi-quant role in that company, a vertical move. You have Hariprasad Das, who had a master's in computational finance, and thereafter he joined our program, and the skills that he picked up that led him to get into quant roles, first in Iperitus and now with Gopalamba, and some of our past students who have moved to US. Harjinder, who was earlier working as a software engineer in TCS, had completed our program and then moved. And Dheeraj, who is currently working as a business analyst in Wipro. Now, the admission to this program is that one needs to have an undergraduate degree in one of the disciplines like engineering or mathematics or statistics or computer science, finance or commerce, with mathematics as one of the subjects, mathematics or statistics as one of the subjects. One can have an economics background and an econometrics background, or one can have a background which includes a master's in business administration, or one has certification like a CFA or a FRM or a PRM, or one can be a chartered accountant with good exposure to mathematics. So that is what the program that we are planning to do for you to be able to get into quant roles in the industry, both in the banking and financial services industry, as well as the IT industry, where these roles are now becoming quite common, even in India. So to end this presentation, I would like to mention that this program, we are looking to get people trained so that we can place them. For example, currently we have an opening which has come a couple of days back for a role of vice president in the valuations of global credit trading in one of the top banks, with salary packages in excess of 40 lakhs. Now this is open for our students. So we'd like to place our students in such kind of roles. And for that, whatever the background, experience and exposure that the candidates are required to have, that is what we intend to put across through this program, the Applied Mathematical Finance for Engineers. So with that, I would like to end this presentation. Hope it has been able to help you in understanding what the field of financial engineering is and what are the career opportunities in India and abroad, and how one can go about it. Thank you. Good night, everybody. Thank you.